Hey everyone, it's Mike and welcome to lesson number 7, Point of Control Setups Part 2. This is the second half of the 10 setups. This is setups number 6 through 10. Now before I begin, a brief disclaimer, this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital is used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so in this lesson, what I'll be talking about is point of control migration, which I've talked about before. Is a big point in point of control, no pun intended. Point of control pullbacks, point of control blocks, triple distribution, point of control, and point of control breakaway. Spoiler alert, the bottom three deal with point of control in second point of control and a third point of control in a bar. So point of control migration, I've talked about, in a market moving up, you should see point of control moving higher, migrating higher, higher, higher. Just as it going lower, it should be going lower, lower, lower. Now, what you want to see in point of control migration occurs over a series of bars moving in the same direction. All have higher point of control. Use a minimum of 3 bars in the same direction. Up bar, up bar, up bar. Each bar has a higher point of control than the previous bar. I mean, I don't want to say it's a 4-bar setup because the first bar should technically be a down bar. But really, that should be obvious. Basically, you're looking for higher point of controls. I mean, some people, one person I talked to that I've explained this to before says, he just uses 3 bars, down, then up, up. Okay. I prefer, 3 bars all be in the same direction, up, up, up. But, again, that's something you can fidget with if you like. Again, my whole hope is that you take these concepts and you develop them into something that works for you, that fits your mentality in trading the markets. What's happening is value as measured by point of control is moving higher or lower. Migration helps to confirm the direction of the trend. So what do you got? You got it right down here, right? Again, I said some people like to have the red bar first and then, sorry, that's not the one. Well, this is it right here, but this is actually the the wave right here. Now, if you're going to use the red candle, should it be lower? Yeah, the point of control should be lower. But again, I like the 3 up candles, the 3 progressively higher points of controls for the point of control migration. Point of control migration right here, red, red, red. If you're looking for, with the green candle before, you'd probably want the green candle point of control a little bit higher. I don't use it, but I know somebody that does, and he's that's the way he uses it. Over here you've got the wave as well. So here you got a prominent point of control. As you start watching point of controls, you're starting to see these things happening that like you say, hey, I see this point of control migration here. I see a wave setup right here. Here I see a pair up. You're seeing bullish here. You see 2 bullish setups here. You see the bearish setup here. It's an 8 range chart. This is a 1-minute chart. This is what I talk about, where you got the red candle point of control down here, then green point of control higher, green point of control higher. One guy I know uses this as the migration, but I prefer just like this, 1, 2, 3. It's a 1-minute chart. Again, this is also a 1-minute chart. Again, if you're using the green candle, point of control higher than red, red, red. I'm just happy with the red, red, red right here. Just as be happy with this one, green, green, green right here. Here you got a pair up as well. If you're using the green, you'd have technically a migration here that stopped right here. Then it just moved back up. So again, me, I just prefer the 3 in a row with lower point of controls. There's a 5-minute chart. Again, if you're using the red, you got your red, green, green. I like the green, green, green. Right here, 1, 2, 3. It's also right here, 1, 2, 3. Here you've got the slingshot. You got the red point of control, lower. Then look at it, pulls back all the way back up here. Boom, slingshot engaged, and it goes forward. So you can see how these things, are appearing over and over and over. As we go through these setups, hopefully by now you should be able to see them a lot easier, quickly, and can pick it up that it's what's happening in the market. So setup number 7 is the point of control pullbacks. This actually has its roots in market profile. In an uptrending market, when the current bar opens above the previous bar's point of control, enter a bid at the previous bar's point of control with a stop just below the previous bar's low. And in a downtrending market, the current bar opens below the previous bar's point of control, enter an offer at the previous bar's point of control with a stop just above the previous high. You're entering on limit orders, okay? So there's a chance you might not get filled and ultimately you miss the trade. So, bear that in mind, all right? That you may miss out on a trade. And what do I mean? It's like this right here. Oops, I thought I had the arrow. I'm trying to get the arrow shape going on here. Right here. So we open up, trade back right at that point of control. You get down a tick through it, just as the same thing here. Here. But this is what it looks like. You pull back to the point of control. That's where your bid is, right? You put your bid in at the previous point of control. Sometimes you're not going to get filled, right? Like down here, you're not going to get filled. Here, you miss it by a tick. That's the chance you take entering on limit orders. Here you got a migration. You're starting going lower. You also got a wave going on as well. If you're trying to get that pullback, you get right up to that level, you just miss it, right? I mean, I don't think you would have sold it here. You'd probably be behind all the other offers, but you'd have just missed it. Just like here, you'd have missed it. But, if you're willing to risk, maybe you want to get in a tick before it. But again, anytime you're dealing with pullbacks, right, you got to be careful with your stop placements because it can keep pulling back, right? Sometimes, people think trading is exact, right? And when you're dealing with pullbacks, everyone wants it to be exact. Pull back right to your level. Oftentimes it pulls back 3-4 ticks through your level. So be careful with, with your stop. Like here, if you're trying to get in on this pullback, right, it pulls back up here and it just keeps going higher. Technically, you should have your stop, above that high. But again, people like to have tight stops. So this one, if you pull back right to that level, it pulls back, okay, then it makes that move a little lower. I'm not necessarily a big fan of this, but I want to include it in there because it's something that people use. Right? I know people that like to trade this stuff, and I've had the great fortune over the last several years to talk to a lot of different traders and get their opinions on things, and they teach me what works for them, what doesn't work for them, and some are like, don't share this with anybody, and people are like, yeah, share it with them, because it's not something you got to realize, like I was talking about before. If you get into a trade for whatever reason, you need other people to get into that same trade or be going in that same direction. So, I always crack up these people and say, okay, I'm going to teach you this method, but I don't want to teach you my method rather because, I don't want other people knowing it. Well, if there's no other participants there, if you think you've got some secret level to draw price lines, where the market's going to come back to, well, if nobody else knows those levels and is looking to participate at those levels, chances are it's not going to be very effective. So what I mean about pulling back here, right? This one pulls back by a few ticks, 3 ticks through. This one pulls back 3 ticks through, and it makes those moves lower. So be careful where you're placing your stops. Don't be like, oh, I gotta pull back right to that point of control, and I gotta have my stop 1 tick past it. Give it a little bit of leeway. That's what you deal with when you're dealing with pullbacks. Is sometimes they pull back a little bit past where you want it to stop at. Okay, like here. Well, it's not a pullback because we opened here and just traded down, but you should get the idea of what's going on. This is a minute-based chart. 1 minute chart. So anytime you're trading with a pullback, right, it can just keep pulling back and and stop you out. Like this one here, if you're trying to get in up here, you're not going to get in, right? This is one, it failed, right? If you got your entry to get long in here, it pulls back, it just keeps pulling back, and next thing you know, you're screwed, right? You're short, or sorry, you're long, and you're getting stopped out. Try and read what's happening in the order flow. Oh my God, we're below that low. I shouldn't be in this this trade anymore. It's a 5-minute chart. Okay, E-minis, 5-minute chart. Now, so the end of October this year has been quite volatile market. Market's been literally all over the places, and you just got to be careful. Especially where you're placing your stop. Don't set it too far away that you're risking too much, and at the same time, don't set it too close that you get stopped out. So you look for the pullback. Right here, you get a pullback. Here, you get a pullback beyond. Here, you get a pullback. Well, this one opens above, then trades down. But if you got a red candle, you should be looking for a pullback up. This is one right here, right? You got the red, and then you got the red. But then you open up down here. It looks like we're going lower. We open up below that point of control. We rally back up to it, and you just keep rallying. This is one that's going to stop you out. Personally, I prefer it more on range-based charts, but I want you just to see it on minute-based charts. Minute-based charts, it's a different animal trading minute-based charts, I think, than trading range-based charts. Point of control blocks. Now, this requires software that can show 2 or 3 point of controls, second and third level point of controls rather. And CRS Charts doesn't have it. I think there's an add-on for it somewhere. Someone was telling me. I haven't looked it up because I already have it on NinjaTrader. I mean, you get NinjaTrader for free, and it's there if you have order flow software. And it's going to occur when all 3 levels are grouped together at or near the bottom of an up bar for a buy, or at near the top for a sell. I talked about this one earlier in the earlier lesson on support and resistance, I think it was. And when a block occurs near the edge of a market, it indicates heavy participation at the edge, which is indicative of accumulation or distribution occurring. When a block appears in the middle of a bar, that is where it's supposed to appear, right? That's where the value in the bar is supposed to appear. Now, when dealing with 3 point of control levels in the bar, you need to widen out your bar duration. I mean, you can look at longer durations, 30 minutes, 15 minutes, 5 minutes, as well as 1 minute on markets that are volatile. But you need a range, right, for it to be effective. If you're trading a market that's got a very tight range, there's no point, in using it, because say if you're trading a 5-range bar and looking at 3 point of controls, half the bar is point of controls. If you're looking at a 4-range bar, 3 of the 5 price levels are going to be point of controls. It's pointless. So this is one that you can widen out your durations on. And what you're looking for is this, right? Point of control towards the bottom. This is stopping, supportive. I don't say stopping. It's more of supportive volume here. Supportive volume right up here. Supportive volume down here. This one, this is a small range bar. Half the bar is like point of control, so I'm not going to put too much into it. The rest, in the middle, it's kind of split here. This is another setup right here. But really, you're looking for those blocks. It's like a voting block, basically. Everyone votes the same way. It's the same thing here with point of control. Right here, in the middle, that's where you expect it. Right, but on a green bar, you're looking for it at the bottom, right here, supportive, right? It's coming in below the previous point of control, then the market rallies up. This one's right in the middle, but this is it right here. This is what you're looking for. Again, lots of times there's nothing to make heads or tails of here. This is what you're expecting to happen in the market. Sort of in the middle, volume is distributed, but then boom, that one instance of something, the market showing its hand to you, the market holding its cards, but then accidentally drops one of its cards out so you can see what's going on. Then you can catch that move up. That's the beauty of trading with order flow. Okay, what just happened there? Okay, here you go. Boom, I put the green arrows on this one. This is where you want it. Up here, kind of where you want it. Here's in the middle. That's where it's supposed to be. Here, it's kind of where you want it. Here's where you want it. Here's in the middle where it's supposed to be. So don't be, thinking, oh, we're in the middle. It must mean something. No, it means that, trade is being facilitated. That's where it's supposed to be. It's the ones on the ends. I probably shouldn't have put all those arrows there. It's the ones on the ends that matter. You know, it's like, imagine market is coming down, then it's met with buying. Market is rallying up, it's met with selling. Market continues on down. You know, that's what it's for, right? It comes down here, met with passive buying, rallies back up, met with aggressive or passive selling and some aggressive selling, because it's point of control. It's on both sides. It's an 8 range chart right here, right down here, right off the low. Boom. And then it makes that nice move up, right up here. You know, up here, you got these two. This one, you know, it's in the second. You got 2 price levels. But then here, right up here at the top, that's what you want. That's what you want to see. Just as you saw it over here, the red candle with point of controls bunched up here at the top that sells off to point of controls bunched here at the bottom and rallies back up. Ideal, like this, right down here, right on the bottom, all 3 right on the bottom. Honestly, that's a bit rare, but it does happen. Those are like, hey, buy me, is what the market is screaming at you. But this is how it is most of the time. You know, it's appearing in the middle, then you get the ones here, the flashes of brilliance. Here, 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 here. Boom. Notice how the market turns at each of these levels. A swing high, swing low. Intermediate high, and swing low here, but then, you know, you come back down, test that low, and then move right back up. Alright, so setup number 9, triple distribution point of control. Now again, this is going to require software that can show the second and third point of control, and it occurs when the 3 levels of point of control are distributed throughout the bar. Keyword is distributed, right? It's not just like one is 1 price away from the other, which is another price away. And in an up bar or down bar, 1 point of control is going to appear near the bottom, another point of control appears somewhere near the middle, and the other point of control appears near the top of the bar, and you go in the direction of price. So how does it look? All right, so remember what I said, where it needs to be evenly distributed throughout the bar. This big green bar here, it's not really evenly distributed, even though there's a couple spaces, you know, a couple price levels in between. That's not evenly distributed. The one that I would consider evenly distributed is this red bar over here. You got in the top third, you have the 1 point of control. In the middle, a second point of control, and towards the bottom, a third point of control. You know, this green bar, no, the 2 point of controls are sort of in the middle, and you got 1 towards the bottom. You know, you're going with the direction of the point of control here in this red bar, and you notice how it sells off nicely off of that. You know, again, you know, distribution, top third, middle, bottom third. Do you see that in any of these other bars? No, not really. This little bar right here, right around 7 o'clock, yeah, it's distributed just like as this red bar here. This is, you know, early morning before the U.S. market opens. You know, the S&Ps, you know, the volume really picks up during the day session. It's a 5-minute bar chart. You know, this is not indicative of really what's going on during the main session. You know, this is the block POC right up in here. And you got some blocks in the middle, which is where you expect to see them. Yeah, this one's interesting. This green candle here, you know, it's not a block. You know, you got a space in there, but this is a green candle. I don't like seeing it at the top. On red candles is where I want to see blocks at the top. If it was towards the bottom of the green candle, I'd put more weight into it, but it's at the top, which is not uncommon. But the distribution is this red candle right here, not this green candle. 2 point of controls are towards the middle of the candle. It's not what I like to see where I like to see it. All right, here, excuse me, this red candle here, you know, this is borderline, okay? Just as this red candle here, the 4th candle into it, is a distribution candle, right? You got it at the top, in the middle, and at the bottom. The previous candle, the 3rd candle from the left, I wouldn't consider that a distribution. Even though it's distributed, I'd prefer 1 point of control at the top third. You got 1 in the middle, 1 at the bottom, and 1 sort of, you know, in the bottom 3/4 of the bar. I want it more evenly distributed optically. You know, this one is borderline right here. This one at 905. This green candle, yeah, I would be inclined to say yes. I like either this point of control a little bit higher or this point of control in the middle a little bit closer to the center. It just sort of goes sideways, unfortunately. You know, but I would consider that a distribution candle, but definitely this red candle, the fourth one in from the left, is definitely a distribution candle. All right, well, now these should start to become a bit obvious to you. What do you see? You see this red candle here, distribution? No, these are too close together and sort of on the same side. All right, this red candle is what I would consider a distribution candle. 3 ticks off the high, in the middle, and 4 ticks off the low. This is like the textbook example. This one also down here at 105 is also a distribution candle. This one here, this red candle at the second candle from the right, these 2 point of controls are separated by a tick. It's kind of a wide candle. I wouldn't consider that, just as this last candle I wouldn't consider. These 2 are too close together on the bottom side. These 2 are too close together in the middle part right there. All right, now on an 8 range chart, what do you see? Right here, 2 ticks off the high in the middle, and 1 tick off the low. Go in the direction of the candle. It's heading down lower. And sometimes on range charts, it just looks a little cleaner on range charts. Things look cleaner on range charts for some reason. Partly because you're dealing in a fixed range, and on minute-based charts, again, it could be wide, it could be short. So you're dealing with that on minute-based charts, and it's kind of hard to deal with sometimes, is because on the minute-based chart here, you got some bars that are very tight. Here you got this is what, 7 price levels, 8 price levels, whereas here you've got 25 price levels. So you're sort of up against it in that sense. Whereas on a range-based chart, it's fixed, right? The amount of price levels in the bar is fixed. All right. What do you see? That's the question asked. What do you see? This bar here at 1118, very fascinating. Point of control at the not at the bottom, but it's prominent point of control in the middle, point of control on the extreme. I like that. Just as I like this one here. This one is a bit close for comfort. This would be like classic if this middle point of control is 1 tick higher, because you'd have it 1 tick off the low, smack dab in the middle, 1 tick off the high. But like I said, you can only trade what the market gives you. Sometimes it doesn't give you that one. You just wish, oh God, I don't want you to not take a trade because the point of control just wasn't 1 tick away or something like that. Now compare these 2 this bar at 1119 against this bar at 1107. What's the difference? Everything, it just seems like 1 tick higher. If this point of control, these 2 point of controls in the middle and the bottom were just 1 tick lower, I think it would look a lot better. It would look more like this bar right here. Exactly, it would look just like it, actually, just about. But I find this one bullish. I find this one right here on the bottom very bullish as well. Okay, so moving on to the last setup, which is the point of control breakaway. And now again, this requires software that can show the third and second point of controls, and occurs when there are 2 stacked point of controls at one end of the bar, and the other point of control is at the other end of the bar along with price. It's like a double distribution or triple distribution bar, but it's basically a double distribution. What's happening is value is forming at one side of the bar at the bottom of what will eventually be an up bar, or at the top of what will eventually be a down bar. Then value breaks away. It looks for a new value area in the bar. Okay, it's gone from either value forming at the top to value forming at the bottom for a market that's moving lower. And a market that's starting to rally, it's forming value at the bottom of the bar, and then it makes a run for the top of the bar. And then the bar closes. Then you form a new bar, but it's left in the point of control in the volume footprint chart. So what does it look like? Now remember what I said. You got to have 2 and then 1. It's got to break away. So this red candle right here at it's 1205, you got the 2 at the top, and then it breaks away. You can see you got some aggressive selling on the way down, and point of control forming down here as the market heads lower over the next 3 bars. This green bar here, this is a breakaway. I would prefer that this point of control, these 2 point of controls were just maybe 1 or 2 ticks lower, but it's still a breakaway. Okay, this is still in the bottom half of the bar, and this is in the top half of the bar. Ideally, you'd like it a little bit closer to the bottom of the bar, but like I said, you can only trade what the market gives you, and it's just not giving it to you there. But okay, maybe you don't take that trade and you just miss out on the next bar. It trades from 01 all the way up to 08. This is a 5-minute bar chart. But definitely this one you should have been able to see. This one's very clear. It's made the big break from the 2-point controls up near the top. Okay, right up here, just going back to the previous one, you got the triple distribution, on the first bar, then even on this bar right here at 11 o'clock. This one, I'd like this last point of control a little bit lower, but just sort of go sideways. Then here, you got point of control, 2 ticks off the top, and then it breaks away. What do you get on the breakaway? You got a couple of imbalances. You got 140, 770. And then it starts breaking away, and you got triple distribution bar in the next one as you head lower, from the 2724 area down to the 2720 area, where it just starts going sideways. This down here at this low, is this breakaway? I wouldn't consider it. I'd really put it in the breakaway category if this point of control was at least 1 tick higher. It's just 2 ticks off the stack point of controls down here, and it's sort of in the middle. I'd like it to be on the top part of the bar. It's at least got to break the 50-point range, and it just seems to be like right at that 50% range. All right, so what do you got? Your market's selling off, selling off, selling off, selling off, selling off. You got a breakaway right here at this is like 12.13. Just went sideways, unfortunately. And then boom, you get a second chance right here. You got your value forming down here, then the market aggressive buying comes in, imbalance, imbalance, imbalance. You form a new point of control up here, then bar closes. Boom, look at that. You got a stacked imbalance right in the middle. So this is the new value area. And then boom, the next bar, this is where the market pops. I mean, it goes from 05 all the way up to 10 in one bar. It's a 5-point move in one bar that you could have foreseen, hopefully, if you were adept enough. And again, like some of these bars, they really look a lot alike, right? What do you got? You got this bar right here. Look at that. Point of controls stacked right up here, or 1 tick off the high, breaks away. A couple of imbalances right down here. Point of control, 4 ticks off the low. Right before the market sells off, It's just all red candles all the way down. You got 1, 2 small green candles, but it's just all red on the way down. Again, it's a move from 2700 all the way down to 2695. And like I said, a lot of these bars look alike. I mean, look at this, what you're seeing right there, right? Kind of looks like this because they look alike. It's the market sort of repeats itself over time. It's just a matter of recognizing what you're seeing and reacting to it. So this concludes lesson number 7. In the next lesson, which is the final lesson, I'm going to wrap everything up on the point of control course and how to use it in your trading. So I'll see you all on the next lesson. Bye-bye.